Hello everyone, this is Maisie, and this is a accounting tutorial video. I want to talk about transaction. Transaction is not a difficult question, but it's the accounting process is the beginning of the accounting process. I hope you can understand. First, the key to being able to understand the effect of any transaction on the financial statements is having the ability to analyze the transaction. Transaction analysis method involves answering 5 questions. First, what's going on? Second, which accounts are affected? Third, how are they affected? Fourth, does the balance sheet balance? Fifth, does the analysis make sense? So about the first one, what's going on? To analyze any transaction, it is necessary to understand the transaction. That is to understand the activity that is taking place between the entity for which the accounting is being done and the other entity involved in the transaction. This is why most elementary accounting texts, including this one, explain many business practices. It is impossible to understand the effect of transaction on the financial statements if the basic activity being accounted for is not understood. One of your principal objectives is to learn about business activities. Second, which accounts are affected? This question is frequently answered by the answer to what's going on. Because the specific account name is often included in the explanation. This question may be answered by a process of elimination. First, think about whether one of the accounts is an asset, a liability, or account's equity. Also, income or expense. From the broad category, it's usually impossible to identify a specific account. Third, how are they affected? Answer this question with the word increasing or decreasing. Accounts think in terms of the effect of transaction on the account balance, the total of transactions affecting that account, and whether the balance is increasing or decreasing. Does the balance sheet balance? If the horizontal model is being used, it's possible to determine easily that the balance sheet equation is imbalanced by observing the arithmetic signs and the amounts involved in transaction. Remember that the operational equal sign in the model is between assets and liabilities, so don't forget that. You know by now that if the balance sheet equation is not balanced, your analysis of the transaction is wrong. This is the most important question. Does the analysis make sense? And it involves standing back from the trees to look at the forest. You must determine whether the result from your analysis causes changes in account balances and the financial statements that are consistent with your understanding of what's going on. If the analysis doesn't make sense to you, go back to question first and start it again. So that is the method to how to analyze transaction and how to make transaction correct. That's it. So I hope you can do your transaction correct and use these 5 methods to write down a horizontal model. See you.